Welcome back, and the big story of the day now is the contra call on OMCs, the oil marketing companies. Sonal, there is a downgrade that has come in for these oil marketing companies today.
Oh yes, there is, and it's interesting because it's come after a strong performance from OMCs in Q2. A lot of these brokerages upgraded the stocks back then, but now Investec has gone ahead, downgraded oil marketing companies to a sell, all three of them, and now they prefer Reliance Industries when they want to play the refining upcycle. Now, do remember, refining margins are very strong in Q2. Singapore GRMs, they've continued to see higher numbers as well, and that is something that the OMCs were surging on as well. Singapore GRMs, they have doubled in more than 2 months. They are at the $13 per barrel mark, and Investec says that it is only a part picture for oil marketing companies, because do remember, they have a marketing side of the business as well. So while refining did well because of higher diesel cracks, they had diesel cracks to the levels of around $4 per barrel as well, reaching to the levels of $12 per barrel at times. This is something which is hurting the marketing business because of higher diesel cracks. They are seeing marketing margins fall from 4 rupees per litre in the month gone by to negative levels right now, and that is something which will hurt these oil marketing companies because they do have exposure to the marketing side as well. If diesel cracks, according to Investec, they remain elevated at these levels and go higher than that, then marketing will continue to suffer. That's why they have sell on all these three stocks, and target price for BPCL at 330, HPCL at 425, and IOC at 145 as we speak.
Okay, but oil marketing companies have done pretty well, right? I mean, what's been the stock price performance and valuations?
So, you know, this year they have done so far. I know Investec says they've done extremely well, but the gains have been around, single-digit numbers. So, if you look at the YTD number, these stocks have moved up anywhere between 11 to 20%. But if you look at the 1 month performance as well, BPCL is up 4%, we have IOCL which is up 5%, HPCL is up just 1%. So, yes, these stocks have done well so far this year. Crude has been soft as well. Refining margins have been strong, and that is something which has worked for these stocks in this year itself. When we talk about valuations, they're slightly higher than what they were historically, especially for something like an IOCL. It's trading at 10.6 times. It used to trade between 7 to 8 times. BPCL, though, has come off from its average valuations because remember, it was trading at 10 to 11 times when the divestment talks were going on. So it's lower than the 5-year average, of course. HPCL is at 7.4 times. It continues to be the cheapest stock in the oil marketing space, and also remember, it has the highest exposure to the marketing space. Around 55 to 60% of HPCL's EBITDA is from the marketing side. So if there's something that happens to diesel cracks, not diesel cracks, the diesel marketing margins, it could impact HPCL the most.
You know, crude oil has always been that one trigger that you always link the OMCs to, but beyond that, what are the next ones?
So, you know, interestingly, there was a fear that ahead of Bihar elections, again, we could see price cuts come by for petrol and diesel. That did not happen. So that was a relief for most of the investors as well. But there was an interesting note that came by Citi on 11th of November, where they indicated that they expect an excise duty cut post-Bihar polls. That is because crude price is something that we always talk about, and crude has been soft for a long time, right? We've not seen those elevated levels, and if there is 1 rupee litre cut in excise duty, it would be around 17,000 crore of revenue for the government, which they'll have to forego. But it's not only a loss for the government. Excise duty can impact HPCL the most because of the biggest exposure, as I said, in the marketing segment, because it'll be a loss, inventory loss for them, and for IOC it'll be the least because they have higher exposure to the refining side. So this is something we'll be watching out for, whether there is really an excise cut that comes by or not. But today, on the back of this downgrade, we've seen some cuts, but again, these stocks also have recovered from the lows.
We're down yesterday, down today as well, but yes, as you mentioned, recovery from the lows of the day. Is that the big story? The oil marketing companies and the downgrade coming in today's session. Take a short break. Corporate conversation on the other side. The management of TruAlt Bioenergy joins in to discuss their business outlook and their recent MOU with the Andhra Pradesh government, and a lot more. Stay tuned.